Good day, ladies and gentlemen, and welcome to the Matrimony.com Q3 FY22 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity to ask questions later during the conference. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Prateek Kumar from Antique Stock Broking. Please go ahead, sir.
Thanks, Chris. Good afternoon, everyone. Hope everyone is staying safe and healthy. On behalf of Antique Stock Broking, we welcome today the management of Matrimony.com, Mr. Murugavel, Chairman and Managing Director, and Mr. Sushant Pai, who is CFO. Without wasting much time, I hand over the call to Mr. Murugavel for his opening remarks, and then we will move to Q&A session. Over to you, sir.
Thank you so much. Good evening, everyone. I hope all of you are continuing to stay safe and healthy. I also like to wish you a very happy and successful 2022. Despite a seasonal quarter, we have reported a reasonably good growth year-on-year on billings and a double-digit year-on-year growth in revenue. This was due to strong execution of strategic priorities backed up by investment in the right area. In quarter 3, on a consolidated basis, we have achieved a billing of rupees 107.4 crores, a growth of 0.5% quarter-over-quarter and 7.3% year-on-year. Revenue was at rupees 108.5 crores, a decline of 1.3% quarter-over-quarter and a growth of 12.2% year-on-year. For matchmaking, the key highlights are as follows. In quarter 3, the billing was at 106.1 crores, a flat quarter-over-quarter and a growth of 6.3% year-on-year. Revenue at rupees 107.2 crores, a decline of 1.8% quarter-over-quarter and a growth of 11.4% year-on-year. We had a 2.15 lakh paid subscriptions during the quarter, a decline of 5.4% year-on-year. ATV, average transaction value for the matchmaking business, increased by 12.2% year-on-year, and also this is due to good growth in our premium services. We continue to track the impact we create for our customers. We are happy to state that we have created 25,500 plus success stories in quarter 3. Now coming to the marriage services business, revenue was rupees 1.3 crores, a growth of 67.8% quarter-over-quarter and 194.4% year-on-year. It includes the consolidation of Shadi Saga for a full quarter. Losses for the quarter was rupees 2.86 crore, 5.5 crore in quarter 2. This was due to consolidations, the cost of increase. On the billing and revenue outlook for quarter 4, matchmaking billing is expected to bounce back to a double-digit growth, both the quarter-over-quarter and also year-on-year basis. Wedding service is expected to continue the current revenue momentum, and losses will be in the similar range of quarter 3. Let me now pass on to Sushant to comment on the key profitability highlights. Sushant, over to you.
Thanks, Muruga. Let me also wish a very happy and successful 2022. Due to subdued billings in September and October in matchmaking business, our revenue declined marginally on a quarter-on-quarter basis, and therefore this had an impact on EBITDA margins. Our EBITDA margin in quarter 3 was at 24.5% as compared to 29% in quarter 2. However, was better than 23.6% a year ago. Marketing expenses are at 41.6 crores as compared to 39.9 crores in quarter 2. Excluding marketing expenses, our margins in matchmaking are at 63% in quarter 3 as compared to 66% in quarter 2 and 63% a year ago. The margins declined due to increase in employee costs and technology expenses. On a consolidated basis, our EBITDA margins in Q3 are at 18.6% as compared to 24% in quarter 2 and 19.1% a year ago. Apart from matchmaking, marriage services had an increase in employee cost due to Shadi Saga consolidation. On an absolute basis, EBITDA declined by 23.6% quarter-on-quarter and grew 8.9% year-on-year. Tax rate is at 25.3% for the quarter. PAT, profit after tax, excluding Astro, which is our associate company, is at rupees 11.6 crores, a decline of 30.6% quarter-on-quarter, and growth of 4.9% year-on-year. Share of loss from Astro is rupees 15 lakhs. Our operating cash flow generation for the quarter has been robust at about 18 crores, and our cash balance is at 318 crores. ROCE is at 18%. On the outlook for Q4 margins, we expect EBITDA and PAT to be at similar levels of quarter 3. I would like to end with the customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time by or on behalf of the company unless it is required by law. Over to you, Prateek. Hello.
Hello. Yeah, thank you, sir. Chris, you can open the line for question and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. You will hear a confirmation tone that you have joined the queue. If you wish to remove yourself from the question queue, you may press star and then 2. Participants are requested to use handsets while asking a question. We will wait a moment while the question queue assembles. Our first question is from Prakash Kapadia of Anived Portfolio Managers. Please go ahead.
Yeah, thanks for the opportunity. A couple of questions. If I look at 9-month sales, they are up around 17% at 3.23 billion. Ad spends in the same period are up around 21% at 1.18 billion. So, when does this, change? Will it be more price increases going forward? So, absolute sales value decreases, or there'll be some, reduction in ad spends, which could happen in the medium term. What is happening, at an industry level? What are we sensing? Any visibility, clarity on some of the ad spends which are still, higher than what we would have wanted it to be? So, if you could give some color on that.
Yeah, thank you for asking this question. In terms of the outlook on marketing, the marketing continues going to be at the higher level because this category there's no stopping or no the decrease in the ad spend by the competitors because there's a marketing spend happening at the ITN level. If not for that, obviously the marketing spend wouldn't be at this level. So obviously when the competitors are spending at a certain level, also later in this phase, we need to set up our marketing in some other areas. So it's not that obviously associated the marketing spend will be probably at a better level. In terms of the growth, while we had almost last 5 quarters, except the last quarter, we had a continuous double-digit growth. Last quarter was one of the quarters we had a single-digit growth. However, we bounced back to double-digit growth this quarter. We expect our growth to continue on a double-digit basis. So we look at the continue to grow and continue to widen the gap between us and other players in this space. Probably maybe at a certain level, the marketing spend may come down for a second, but I don't know when because it's very difficult for us to say that, whether in this category, whether today's ITN competitors spend, whether it would continue for the short term or long term, it's very difficult for us to predict. But however, as an organization, our outlook is good, our growth prospects are good. So we continue to mark figures, continue to drive the growth. And probably at a certain point of time, the marketing spend comes down. It will be good even otherwise. When you continue to drive the growth and over a period of the marketing continue to improve. Even if the marketing spend, it's continue to remain at ITN level. And again, it depends on some of the growth possibilities for us. The marketing spend is further more positive.
Okay. And we don't see a scenario of the earlier case of, say, absolute sales value increasing or pricing changes to negate or counter this higher ad spends?
Again, we look at the ARPU. If you see that it has gone up by almost look at a year-on-year growth by 12.2%. We continue to figure out what are the ways to optimize the price and all those things. So price increase is one thing. We are not done the price increase. We can look at the optimize various segments, continue to drive some other segments. So we look at the various ways to drive the ARPU. Price increase, one of the things, that's something required. We'll do it at a certain point of time. Timing is not on the time.
Sure, that's helpful. Secondly, if I look at, data since our IPO in September 17, we've, generated around 270 odd crores operating cash flow in the last 4 years. Currently also on an annualized basis, we'll generate around 80 crores of operating cash flow. So that's, 350 crores of operating cash flow in the last, 4.5 years since IPO. Plus there is a cash balance of over 3 billion rupees. But, for some reason our market cap is down 18-20% from IPO price. So, why not consider a buyback and, ensure value creation and showcase the market there is a lot of value in our business? Why I'm trying to make this point here is, unlike some of the new age businesses which have no cash flow, no earnings, we have a genuine business model, genuine cash flow, genuine profits over the years. And, as a promoter, if you don't participate, your stake further increases. So that is just an observation.
That's a good suggestion. We appreciate that. Sure, as you rightly said, it's a company, it's a strong cash flow generating company, and probably I've shared in the past. The entire entity was built with a limited capital. So, and again, the people pay in advance. Our EBITDA to cash generation has been very healthy. We continue to generate cash. So the company definitely know that we are undervalued, because the company, if you look at the Q4, we are talking about the double-digit growth. That means we are getting almost like we are talking about double-digit growth quarter-over-quarter, even year-on-year basis. We are almost talking about getting close to around 120 crores of thing. That's a kind of billing value. That means annualized, the company getting almost close to around 500 crore of 480 to 500 crore of that kind of run rate company. And we are talking about the cash balance and assets and all those things. As a company look at, we definitely undervalued, we know that. So, but we know that as a company leader in this space, we continue to drive and execute things, and we have been, and started growing well. This year, for the entire year, we have double-digit growth both on the billing as well as on the revenue side. So we continue to grow and continue to drive cash, continue to improve our market share, and so we hope that at a certain point, time market realizes and rewards us sufficiently. However, the question of the buyback and and that the board has to decide on what can do. Sushant probably can share his views on the question raised by you. Yeah.
Yeah. So capital allocation is definitely that we would continuously consider along with the board. So obviously buyback, dividends, they're all form of capital allocation, and we'll have to evaluate it at an appropriate time when the timing is right, when we believe it may be a good idea to do something like that. So that's the way to look at it.
Sure. I'll join back the queue for more. Thank you.
Thank you, Prakash.
Thank you. The next question is from Vivekanand of Ambit. Please go ahead.
Thank you very much for the opportunity. Muruga, can you please talk about the market response to the new products that you launched, as well as foray into new markets?
See, it's still in a very early stage, and both with the launch of new products. It's still just a few months. It's too early to comment on those things. And Bangladesh, finally we were able to get the operation going, and we just launched our TV promotion. So we just launched as of yesterday. Again, both are in very, very nascent stages. So it may take some time for us to understand and how the whole thing is going to pan out.
Okay, I'm curious to understand this Jodi app, which is Tamil language app, and I know last time also you had said it was very early. But any color that you can provide? I guess it was launched in early November, so you probably are in the third month. How many, are there any metrics that you can share, or any sort of color that you can provide on the kind of traction that it is getting, and how are you promoting this? Are you aggressively doing TV ads in Tamil channels, or is it primarily online marketing? What's the pathway for acquiring users in that app?
So I think it's still a few months only, Vivekanand, because it's November and it's 3 months. So still early. I'm getting a customer feedback, understand, trying to get the product market fit and trying to get our working right. And in terms of the segment-wise, as a company, as a policy, we don't give the segment-wise breakup because we run various matrimony sites. We don't give a breakup. We talk about overall consultation matchmaking basis. And also the form of marketing, we do a various forms of marketing for all our businesses, TV, digital, and other forms of marketing. So as I said, still very early, and we did launch a TV commercial in Tamil Nadu. Again, it's just 1 or 2 campaigns. But as I said, still in the very early stages, and so nothing specific to share at this point.
Okay. So next question is on the strategy that we had embraced, say in end of 2020, which is segmented pricing, which allowed us to pursue a lot more users to transact, persuade a lot more users to transact. Are we kind of going back to the original strategy of premiumization now? I mean, we're seeing that the transactions on matchmaking, the paid transactions, they've remained stagnant for the last 4 or 5 quarters. So is there a change in stance as far as the segmented pricing strategy goes?
Yeah, we continue to try various strategies and see what is the right mix of ARPU and the conversion. So we continue to experiment, continue to do those things. So we continue to experiment both the things there and continue to try, not experiment, continue to try one hand segmentation pricing, other hand try to maximize. I think our strategy has been on both the sides. So there are quarters we see the ARPU moving up, there are quarters we see that the volume moving up. We continue to execute those strategies to drive the revenue. The ultimate thing is about driving the revenue.
Okay, and Muruga, what gives you the confidence of sustaining double-digit growth in 4Q and going ahead? What are you seeing in the market that convinces you of double-digit growth now?
Yeah, we are later in this stage. We continue to gain market share, continue to execute well, and we are definitely very confident of double-digit growth, not in this quarter, but continue to kind of progress in the double-digit growth.
Okay. Second set of questions for Sushant mainly. So, Sushant, you said that 4Q EBITDA PAT will be similar to 3Q levels. Why this guidance, given that there's a high chance of double-digit revenue growth? Are your costs going up? Can you give us some color on the AWS migration that you had done? Are those costs in your base? And how should one think about the fixed costs now?
Yeah. So what has happened is there are 2-3 factors. So one is, if you look at our Q2, right, the billings did slow down a bit in Q2, or rather Q3, I meant. So which is now November, December sort of a time frame. It did slow down. And therefore, the revenue for that, the gap revenue, becomes slightly smaller than expected when the billings slow down the previous quarter, which is the quarter 3. So that is one reason why we have kept flattish, EBITDA and PAT. The second thing is, marketing may move up slightly, so that can also cause a bit of an impact, from where it is. And the third is, yes, in quarter 3, I did allude to that the technology costs did increase a bit. That migration is going on, so that some more costs will come in Q4 as well, because it accumulates over a period of time. So all 3 reasons, the quarter 3 billing, which did slow down a bit, which causes an impact on revenue for the next quarter, which is quarter 4, slight increase in marketing, and as well as some expenses increase in technology costs.
Yeah, just to add to what Sushant said, if you look at the Vegan and the billing with the revenue, the difference will be at least more than probably around $1 million or maybe 7+ crore. That's the kind of difference also will be there, and we expect that to happen. So in Q4, because the funds Sushant mentioned, so there's a gap of at least 7+ crore. We see that's a possibility, So that's the kind of thing. Basically, the billing and the revenue, we see that quite a gap because of the reasons that Sushant had explained. So that's one of the reasons of that,
Okay. So Sushant, just to understand the margin evolution better, X of marketing, will we get back to those 65-66% levels that we had reached quite some time? I mean, just recently, right?
Yeah. So I think as we make up our plans for next year, I think we'll have a clearer picture on margins and profitability, because we need to look at the full year into picture. But for the next quarter, I believe it will be at sort of similar sort of a level, because if I said overall EBITDA and PAT are similar levels, then and if marketing is slight increase, which also means excluding marketing also will be at very similar sort of levels as per Q3. But how it will pan out for next year, we need to see the overall growth trajectory, what is the sort of investments that we'll be doing, and we'll have more clarity on this when we come back at the year-end results.
Yeah. Well, I just have to, definitely we have better clarity next year. But again, the nature of the business is because part of the marketing, the business cost, definitely getting back to our 66% a year as the revenue increases, that would happen automatically. Okay, so because for us, the other costs, today, when this quarter, some costs are going up on account of AWS migration and other things. But achieve progress, definitely getting back to the margin of 66 a year, that's absolutely not a problem. In fact, part of the marketing will be going to be the single largest cost in the marketing business. And so I don't see, but definitely the better clarity, better direction next year. But if you look at the outlook, definitely they are getting back to the margin is absolutely not a problem. That can happen in the
Right. Just one last small data point. What's the cash balance, cash and liquid investments in the current quarter?
So it's 318 crores, 318.
And you have made all payments for the Shadi Saga acquisition, right?
Yes, we have done all the payments.
Okay. Thank you very much and all the best.
Thank you.
Thank you. The next question is from Kush Gosrani of InCred AMC. Please go ahead.
Thanks for the opportunity. Hope you guys are doing well. Just wanted to understand what is the quantum of price increase that we have taken in this quarter?
No, we are not at any price increase. So, in fact, one of the questions whether there is ways to drive the business, we are not at any price increase for a long time.
So, will we be taking any price increases going ahead since the advertisement costs are inching up over the next few quarters as well?
We not nothing on the cost of this one
so, that's helpful. And in terms of advertisement cost, how do you measure that these increased costs is getting us the ROI on the spends that we do?
See, most of the advertisement is on TV channels, and while we definitely see some impact of the profile acquisition going up and do the TV advertisement, but again, very difficult to fully quantify the ROI on the TV advertisement. So TV advertisement is more of brand building and ensure that the brand has a continuous visibility and also reach in the market. Also considering that the increased competitive activities, you have a certain threshold of the marketing spend. That some of the market definitely is spending much more than what is required because the companies in the market are spending much more than what we think it's required in our books. So sometimes stepped up, but the spending also required. So TV is more of brand building and sustaining, and it does contribute to the profile acquisition to some extent. So if you take a pure ROI on TV advertisement, we cannot measure that way. So TV advertisement, is it necessary? Yeah, it is important to have. Whether this amount of TV advertisement, it has to, may not be the case, but however, at this point in time, you need to spend the economy. So, but look at digital, we do measure the ROI because digital is very easy to measure the ROI because you can directly link the result of the effect of the advertisement order. The TV is very difficult, but we definitely have mechanisms to measure what kind of impact it has in order, but you can't fully think ROI with the TV advertisement. TV advertisement is always brand building long term, not the particular quarter.
Sure. And could you also highlight on in terms of the wedding services business, could we see the run rate now increasing to 1 crore per quarter post the acquisition as well?
Sorry, I was not, it was some noise.
I'm just asking, can marriage services sustain the 1 crore revenue per quarter post the acquisition as well?
I think definitely should move up. In fact, we have taken a goal of possibly, taking a aggressive goal of getting the under crore revenue in 3 years, 3 years. That's the goal we are trying to achieve. Okay. A lot to be done on that space, and while the integration still happening, is not done yet. So post integration with Shadi Saga, hope we will be able to drive much better numbers as well.
And the losses will move back to 2 crores, which we had 1.6 to 2 crores in the Q2. Am I right?
Yeah, we have to get to that kind of numbers. We continue to drive the growth and wedding services. Should good. As I told you, internally the goal is to try and get into 100 crores in the next 3 years. That's the kind of goal we are trying to achieve. And again, at this point of time, still the integration is not done. And we just hired a national sales head of wedding services, which just joined us. And we hope we'll be able to continue to execute and drive well down the segment. So we see definitely opportunity, and we hope we'll be able to continue to. We'll definitely be able to maintain this kind of great in wedding.
Sure, sir. Thank you, and all the best.
Thank you.
Thank you very much. The next question is from Elroy Lobo of Kotak Investment Advisory. Please go ahead.
Yeah. My question is more to do with the growth of the industry. Everybody seems to be spending a lot on marketing. We also seen, recently you have put out something on your annual, metrics on what's happening in the matrimony market. Everything seems to be moving in the positive direction. The market is pretty big, but yet the industry in terms of size is still in the region of around 700, 800 crores. So I'm just trying to understand what is constraining this industry to grow at about 20% or 25%, despite all the efforts made by all the players to step up marketing spend. What is constraining the growth of the industry from being much higher than it is today?
Marketing is just one of the levers for the growth. Marketing, sometimes marketing alone cannot drive the growth. This year, as I said, we are getting into annual basis growth and building and the revenue side. Our endeavor is to move the much higher growth. Well, as we progress, we definitely move to consistent double-digit growth, and we are working towards taking to much higher growth. We believe that as we progress, we definitely able to move to a much better growth in terms of growth percentage. So because it's not just marketing, we continue to execute well on various dimensions, conversion and other things. So we believe that as an organization, as we progress, we'll be able to move to much higher growth percentage.
So do you envisage that in the near future, you could actually see growth rates being much higher than what you're reporting right now, at least, moving up like a hockey stick, or is it, going to be more gradual in terms of, the scale up in terms of growth rate? Because whenever we look at this industry, the opportunity seems to be pretty big. And also you're seeing significant amount of internet penetration. I think these days, even the youngsters want to choose their own partners. So everything seems to be moving in favor. So I'm not able to understand why this industry can't grow at about 20-25%. And, what efforts being a market leader have you made to grow the market?
Yeah, definitely. We continue to make efforts and taking steps to definitely move to that kind of growth rate. Whether that happen immediately or actually progress, but definitely we are in the right trajectory. Okay, because since we've been basically there for a long year, I don't see one quarter suddenly becoming an order, but definitely we see that as a direction, I see that that's happening. Okay, whether it happen immediately in the coming quarters or maybe a couple of quarters down the line, but definitely we see that as a growth trajectory at this point seem to be tending towards better set of the double-digit growth, and I'm talking not about Q4 definitely get a double-digit growth. We definitely tend to move in the direction. We definitely see that as a company, as the direction we see that we'll move into the much higher growth percentage.
Also, one of your competitors has recently got private equity investment. Do you see any behavioral change in terms of pricing that has happened because of that? And given the fact that your other competitor is also bleeding, when do you think, pricing is going to move up? Because everybody, except yourself, is basically not making money in this business. So are we at an inflection point where you will see, players yielding and, prices going up?
And you look at our pricing that we are not, except some market where we are sort of to some discounting everything. I think our pricing has been sort of independent of the competitors, because the majority of the market we have strong leadership, and we don't worry much about the competitor price model, because we have a strong reach, strong network effect, strong brand and all. Look at our ARPU also has been sort of considerably moving up and all. Well, we do offer some discount or some segments. So in fact, our pricing is independent of competitors, except some market, for North India, where you have to resort to some bit of discounting because of this competition. But in North India, one part of market, but again, they are also a genuine market. So for us, as a company, the way our outlook is that we continue to see that our growth momentum will continue to increase our gross margin, excluding marketing. We continue to go and invest also for the type of growth. That's definitely looking at. And so we're going to focus on our growth, our outlook, our future, and continue to widen the gap between us and the other players, and that's how we are seeing our outlook.
And the last question I have is on the NRI market. When do you think that you will achieve, leadership in that market? I think one of your competitors is ahead of you. And how big is that market right now?
So the NRI market, certain percentage, because India is obviously much bigger market. NRI market is not a very large market. However, the NRI market, the market is maybe divided, for South India or certain markets, we are obviously South and East to some extent this. Even among the NRIs, we have a strong leadership. Only for North Indians and say Gujarati, Punjabi, where one of the competitors ahead of us in the North. So net, I think NRI we may be equal level of the other players as well. It's not that it will be. It's more like a certain segment you are obviously strong reach. Certain segment obviously a competitor in the NRI market has a much better reach now. But next time I think NRI market we are not bigger than anybody else now.
Okay, thank you.
Thank you. The next question is from Mohit Bhagwani of HDFC Securities. Please go ahead.
Hello, hi. Yeah, thanks for the opportunity. So I have two questions. So one is on the ad spend. So we are doing about 160 crore annual run rate ad spends, right? So you mentioned that most of the spend is on TV channel advertisements. Now, I just want to ask, what are your thoughts on, shifting this budget towards digital channels where most of the individuals are, especially considering that the young individuals are spending more time on smartphones and social media. So do you believe that, if you deploy other strategies like, the influencer marketing, for example, do you believe that, you will shift to that strategy and, increase your spends on that front? That is my first question.
Yeah, so basically, directly, the budget, kind of shifting towards the digital side. However, at this point of time, TV constitute large segment or large percentage of our ad spend. The TV at this point of time continue to be a major part of our marketing spend. However, we look at the year-on-year basis over a period of time, definitely we are increasing spend on our digital side, which has been growing at a much higher percentage compared to the money what being on the TV side. So basically, the TV forms large part of marketing spend. However, digital, the growth marketing spend on digital side is much higher percentage. So continue to shift our budget to digital side.
So do you believe that this allocation, right, between TV advertisement and digital will change in the next 2 to 3 years? Do you believe that shift will happen? Say if it is 60-40, will it become the other way around? Will it become more of digital in the next few years, and you will be able to target more users via that?
Yeah, digital will continue to increase the spend on digital. However, it's very difficult for me to say at this point of time whether it's going to be will be other way around in the next 2 to 3 years. It all depends on how the whole thing is going to evolve, and how the competitors spend on this category. There are multiple factors going to take it. However, as I said, directly, digital is going to take more share of our marketing side. However, I see that in the coming years, TV continue going to be a large power market.
Sure. So my next question is on paid subscriptions, right? So we are doing about 0.22 million of paid subscriptions in a quarter. So just want to understand if you can give us a sense of how many of these are fresh additions. What I mean by this is like for the sake of simplicity, if you assume one paid user coming in quarter 2 and taking a monthly basic package of 3 months, and if he doesn't find a match, then he comes again and pays again for the third quarter. So he's actually a repeat customer of yours. So out of these 0.22 million in a quarter, how many of these would be kind of fresh additions who are paying for the first time on your platform? So if you can give any sense of this.
It's between around 55, 45, 60, 40. That's a mix between the first time payments and renewal.
So you are saying 60% would be like the first time paying and 40% will be on a renewal kind of users, right?
Again, it's between, you can assume 55 to 60% first time payment and 40 to 48% renewal. That's a broad mix.
Okay. Thank you so much, sir. Thank you.
Thank you. Next question is from Nilesh Shah of Envision Capital. Please go ahead.
Hi, Muruga. Thanks for the opportunity. Just wanted to understand, you mentioned initially that billings were a bit soft in this quarter. Why would that be? Wouldn't this be like pretty much a normal quarter? There was really no significant disruption or anything in terms of socializing. So why would billings have been soft in the quarter gone by?
So there is a bit of inauspicious thing was there, end of short period, one thing, plus also that the festival had an impact also, the Diwali and the festive seasons. We definitely saw, while the Q2 was normally the Q2 is seasonally the weak quarter because of the inauspicious period, and some bit of the festival and other things had an impact on quarter 3. Normally for us, the Q3 has been normally a little soft quarters. So Q4, Q1 are the best quarters for the whole thing actually. While not to large extent inauspicious period in a quarter 3, but in some market like say Tamil Nadu and Andhra, the December middle, the inauspicious period starts. It's called Margali in Tamil Nadu and similar period in Andhra as well. So there is a bit of inauspicious period, some festival have impact. So Q2 again is another. So Q2, Q3 seasonality-wise it is softer, and Q4, Q1 are the best quarter.
Okay, thanks. Second is Shadi Saga. You spoke about an aspiration to get to 100 crores of revenues in the next 3 years. Do you think by that point of time, Shadi Saga would essentially be profitable by then, or it would still kind of be in an investment mode and it would still be incurring losses then?
Yeah, we reach that kind of revenue, I think hopefully it becomes profitable. And I have said, Nilesh, it's an aspiration number. Okay? That's a direction between that the next 3 years we have to get to the number. We're taking the direction not start to get to the number and chase aggressively to happen. However, you understand revenue is hardly 50 lakhs a month and all that. We definitely we have a long way to go to get to the number. But there is opportunity, and I believe that we'll be able to execute well and able to move to that revenue. And when we reach that kind of thing, no reason we should be losing money. I'm sure that level of revenue should be profitable.
And do you think getting to this aspiration, we can do this organically, or you think we'll still have to kind of pursue inorganic growth even to get to this first aspiration of 100 crores in revenues?
I think we can do it organically. So because I think Wi-Fi integration, I think we got the certain cloud that require the strength in the product team. I think we can able to do it organically.
Okay. And the last one is essentially what one of the participants mentioned about buyback, and I strongly urge you to basically consider a buyback given the kind of cash that we're sitting on, the market cap that we have. The cash that we have is probably in terms of high teens in terms of our market cap. So I strongly urge you to consider that. You are the principal shareholder, you are the CEO, you are the managing director. I'm quite sure the board is going to be guided by what you think and what you suggest. So I would strongly suggest that we get there, especially if we don't have any significant plans for inorganic growth.
Thanks, Nilesh. Appreciate it, suggestion.
Thanks, Muruga. Good luck.
Thank you. Yeah.
Thank you. The next question is from Sonal Minar of Prescient Capital. Please go ahead.
Hi there, this is Sonal Minas. I had two questions. First one was just wanted to get some sense from a 3-4 year perspective on the average age of a user on your platform. Which direction has this gone by to? And just wanted to understand that a little bit more. Secondly, on your marketing spend, I think gentlemen before me have asked some questions. Just wanted to understand, as digital becomes more and a higher percentage of your overall spend, do you see your marketing spend tapering? Do you see your overall spends tapering because those are more performance-led and more directly attributable to the users who sign up on your platform? So I have these two questions. Thanks.
So the average age, if I understood your question rightly, the average age of maybe around 26 to 29, that forms the major part of users for the male. Female be around say 23 to 25. That forms a large chunk of our the base. However, we see that any growing economy, every 10 years or 15 years, the average age of people getting married slightly move up because people tend to have a higher priority towards their personal growth and all. That's a trend globally what you're seeing. As the country progresses, the people delay the marriage. That tend to happen. In terms of the spend, we see at this point in time, the TV is continuing going to be a large part of our market spend. Definitely, the shift slowly happening to the digital side. That the growth is happening. Whether the digital is going to be large part wouldn't be the case at this point of time. TV definitely have a large part of our marketing spend. Again, the marketing spend today is not in isolation. Again, some market obviously we have to spend more than what is required because of the competitors spending more than what we think that it's required to spend in all those things. But again, so sometimes we have to respond to the competitive marketing spend to ensure that we continue to grow and protect our market share. So again, if the competitive intensity reduces, obviously our TV marketing spend, we wouldn't be spending so much. Look at 3 years ago, our marketing spend for the entire year was at the time of IPO was 50 crore. Yes. Now it's come to take almost like 160 crore for the so today actually we are spending more than what is required, but that's an unfortunate situation. But we'll again, having said that, we continue to invest and continue to grow and maybe in the future sometime we see that the marketing spend reduces. That time may get the benefits of the reduced marketing expenses.
On a steady state basis, like if you go back to time of your IPO or let's say otherwise, 15 to 20% of your top line spend on marketing is like a steady state, stable kind of a marketing burn for this category. Just trying to understand that.
Ideally, for our this kind of it's a similar level of competition what we are at the time of IPO and what is required to spend. But I think we can manage it 100 crore marketing spend.
Sorry, 100 crore as of now.
Compared to 160 crore, probably maybe we can manage it to 100 crore. That's sort of tentative response.
Understand that. And so just trying to understand the first part of the question. You mentioned that the average age of user is growing as with the economy. If on your platform, have you seen like as the average age has also gone up, the preference of users for a particular feature or for a particular aspect of service has also changed? I'm just asking from a longer 3-4 year perspective, or it has largely remained the same. Just trying to understand what a consumer is needing as the age goes up, basically on that. Do they need more physical interaction? Do they need better features? Do they need other data about the likely partner they want to look at? What is it that is changing in terms of behavioral aspects there?
The core need is to find a life partner, get married. They have to see the right number of matches and it's connect with them. So, but again, as we need to continue to innovate, continue to make it easy for user to discover and get connected. So the core matchmaking platform continues going to be part of a large share of our revenue. And as I said, we recently launched accepted matches. It's a patent pending feature. We are the first one to launch it, that it shows the people the most relevant matches. So sometimes the online matrimony sites, people are bombarded with irrelevant matches. So these accept matches, though the number of matches may come down to the users, but users end up using relevant matches. So we continue to make progress, innovate, so that the people are able to see the relevant matches and get connected and get married. However, whether any preference going to change, 3-4 years short period for any trend to be seen out. Maybe as the country progress, when people become more and more this year or other things, probably maybe the need for maybe the personal service stately can move on all that thing. But again, it may not happen in the next 2 years. But again, maybe the longer possibly that may happen.
Sure, sir. Okay. Thanks a lot. This is from my side. Thank you.
Thank you very much. The last question is from Deep Shah of BNK Securities. Please go ahead.
Thank you so much for the opportunity. So looking at the numbers of one of our other competitor, it seems clear that even with these numbers, we have gained market share. So could you just elaborate a bit on, what's happening in the northern market and where do we see ourselves there? That was the first question. The second question is, you earlier said that, we are trying various strategies to mix pricing and number of transactions, but the transactions seem to be flattish now for the 5-6 quarters. So if you could give some more idea about what's happening on that thing, that would be very helpful. Thank you.
Yeah. So, see, we have continued to gain our growth across the market. Our growth is not limited to any particular geography or markets. That's a point number one. In terms of the paid volume, the payment is because we definitely expect the growth momentum to continue. So when the growth momentum continues, obviously it will reflect in either on two aspects. Either the volume will move up or ARPU will move up. So we continue to drive both of them. So when the growth increases, definitely see the reflect either in terms of volume moving up or ARPU moving up. At this point of the current revenue, the current mix is the ARPU a certain percentage and volume a certain percentage. But the outlook for the coming years, when they move up, obviously we see that the volume to move up as well. So.
Right. So this was very helpful. Thank you.
Thank you. The next question is from Samir Pardikar of ICICI Direct. Please go ahead.
Thank you for the opportunity. Sir, what is the approximate breakup of our marketing spend on TV and digital? Is it 70 on TV, 30 on digital, or it is on a higher percentage?
We are not doing a good breakup, but major part of spending is on TV.
But any ballpark number will be really helpful.
So I think majority maybe around 70% or something, 70-80% maybe on. I don't know exact thing, but majority is on TV.
Okay. Second thing is, sir, so we disclose any premium or paid subscribers for us on the quarter?
No. We don't do any premium paid subscribers. There's no. But the only thing is, we can say that one of the reasons for ARPU increases, we've seen good growth in the premium services segment as well.
Yeah, personal service.
Okay. And one of the competitors on the call said recently that consolidation is the way forward for the matrimony market to grow in India. So any comment from your side?
No, I think we are just focused on driving our growth and continue to widen the gap between us and other players. I think, yes, we are super focused on our growth. So if there are anything in the future, we may consider. In fact, for us, I think we can continue to execute our strategic priorities and the plans were in front of us. I think we can able to drive growth. If there are anything in the future, we may consider. But
anything on the mind for
no, at this point of time, we are focused on our growth.
Okay. Thank you. That's all from me.
Thank you. The next question is from Vivekanand of Ambit. Please go ahead.
Thank you for the follow-up opportunity. A couple of them. So one, how much money have you earmarked for new product launches as well as investment in Bangladesh, Sri Lanka, and Muslim matchmaking? That's one. Secondly, we've seen that you invested in Shadi Saga, you've invested in Astro also, and essentially you've been making these small acquisitions in the last few years since you got listed. Are there similar such acquisitions available which can supplement the current offering that we have, where you would want to deploy your capital, or given that now we are heading into a scenario where startups may not get funded as easily as they did in, say, 2021? Thank you.
Yeah. In terms of the any appreciation, other things, we continue to, if there's any opportunity which can add value to our offerings. So Shadi Saga was definitely a good acquisition because it enhanced our travel and wedding services. Astro is definitely one of the offerings of matchmaking side because we provide a strategic service of Astro fishing. So it was in a sort of strategic investment as well. We continue to look for any opportunity to strengthen our offerings of capacity, which should do that. And in terms of the breakup of the spend wise, and we have the overall marketing spend. We try to manage according to the need. We try to manage in the overall marketing budget. It depends on some segment. We see the traction. We invest more behind that initiatives. Second, we are almost a stagnant because Bangladesh just launched TV campaign and other things are very recently added. Probably next year when you go to annual plan, you have better understanding. However, again we try to manage with the overall city, and again it depends on the need. It depends on the opportunity we kind of allocate within the marketing part. So because the things are dynamic in nature, very difficult to have that fixed number for various segments as well. But there's a broad number, but some of things tend to change. Depends on opportunity. Depends on the competition. It depends on how the working, how the response for some of our offerings as well. So a lot of dynamism also in some of the new ventures. So it's very difficult to put a fixed number for various segments at this point of the time.
Okay, understood. And just one last follow-up. So for the international foray, versus what you had outlined some time ago versus where you are now, I guess there are a few products that you are still to launch internationally, right? So by when can we expect you to do those launches in a full-fledged manner? I'm referring specifically to the product on the Muslim match in international markets.
Muslim match already there. We continue to make progress on that market, and we are definitely looking at some other offering as well. So probably sometime this quarter we'll be able to launch something for the international market.
Okay, great. Thank you.
Yeah, if there are no more questions, we can close the call. Chris?
Yes, sir. We have no further questions. And I'd like to ask you to just make some closing comments.
Yeah. So thanks, Pratik. Thanks, Antique, for hosting this call. Thanks, Chris. If you have any further questions, please do get in touch with us. Thank you once again.
Thank you for your interest in matrimony.com, and look forward to staying in touch. Thank you very much.
Thank you very much. Ladies and gentlemen, on behalf of Antique Stockbroking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.